With the recent uptake in the inflation rate, one cannot help but wonder if this is a momentary blip or if it is a new trend. Welcome to the Real Estate Podcast with me, Nico James-Bock, a broker with Royal LePage Signature Realty in downtown Toronto. I want to talk today about the recent uptick in the interest rate, in the inflation rate, as well as its impact on the BOC's next decision, interest rate decision, which will be on June the 7th. As I mentioned, last month's sudden increase in inflation is the first acceleration in the cost of living since June 2022, when Canada's inflation rate hit a more than 40-year high of 8.1%. So everything is getting more expensive. And when I say everything, I mean everything. So the big ticket items like housing, gas prices, and food are all trending upwards. They're all heading up in an upward direction in terms of price. So the question remains, will the BOC raise their rates at their next policy rate meeting? Well, the next BOC interest rate announcement is Wednesday, June 7th. The one following will be Wednesday, July 12th. So the next two interest rate announcements will be quite interesting, as they will be a reflection of the BOC's take on the recent uptick in the inflation rate. As you know, the BOC is trying to get inflation back down to at least as close as possible to the 2% mark. Realistically, that will most likely be 3% by the end of 2023. So what can we expect over the next 2-3 months? So the June 7th interest rate announcement, I at least am now expecting there to be a small interest rate hike. So 25 basis points, that's a quarter percentage point. That is just my opinion. They may continue the rate hold, the position that they took after March's interest rate announcement, and it held firm in the April announcement. If we look again at TREB's average price over the period January 2019 to April 2023, we see, as I mentioned in the last podcast, when I talked about the April TREB stats, we see another increase in prices across the board, starting in April. The price increase actually started in February. So there was another increase in March after the interest rate hold announcement, and again in April. So it's important to look at the trend line, as it gives a good indication of where prices are headed as we move through the spring market and into the summer market. So it's most likely, we're most likely going to see additional price pressure, upward price pressure, as demand increases and inventory remains historically low. Inventory is going to be a problem as we move into the rest of 2023. Transaction volume is down 35%, below the 10-year average over the past 10 months. Pent-up demand for homes and pent-up desire to move will put increased pressure on on low inventory and drive prices up. So transaction volume, we're hoping, will increase, and I'm seeing that in the stats for May. There is more turnover, but inventory remains very low. So yes, we're seeing more transaction, but it's relative to the amount of available inventory. So we're still going to see relatively low transaction volume relative to what it has been pre-pandemic, and even during after the first or second lockdown during the pandemic, where transaction volume increased significantly. The recent uptick in inflation causing some speculation that the DLC may require another rate increase. Historically, when we see a pop in prices, like we witnessed after the beginning of the year in February, there can be a short pause in buyer activity. A natural result as buyers assess their budget and the reality that in some micro markets, one must pay over 100,000 more today than just 90 days ago. So we're not going to see that pause in buyer activity. We're most likely going to see buyers flood into the market as they have been doing, looking for that next home, and they're finding that it's a huge challenge. It's a huge challenge. Consumers that have chosen to bet that prices would go lower have likely missed the bottom and will need to digest this new reality. So as buyers head into the market after sitting on the fence for a few months as interest rates headed upwards, the reality is prices are going to continue to go up. So those that believe that prices would go down and held off on their purchase are going to remain disappointed. Although there may be less price pressure from this point over the next few months as consumers wait for a signal from the Bank of Canada on June 7th and again on June 12th, it would be prudent to be in the market. So I'm encouraging people to be in the market, seeing homes, doing the regular home search and actually physically seeing homes that are available for sale and understanding sale prices if they're considering a home purchase or investment over the next 12 months. This trend is not going away anytime soon. And we're going to see over the next coming months a huge pressure, especially as we head into the spring market. Summer market is typically slower. It's the second slowest market of the year after the Christmas holidays. We're not going to see that slow down this summer, and we're going to continue to see brisk activity into the fall and into the winter. Further confirmation of need for housing is seen in the condo rental market results. People continue to pour into the GTA. For the year 2022, Canada welcomed 437,180 immigrants and saw a net increase of the number of non-permanent residents estimated at 607,782. All of these people are going to need a place to live. Most will gravitate towards the GTA market, and a significant portion of those new immigrants will head to the rental market as it's slightly easier to get into the rental market to qualify based on income as opposed to buying a freehold property or a condo. And more are coming in each year. So if we saw 437,000 coming in 2022, we can expect that number to be around the same or slightly higher, roughly around 450,000, as the government tries to satisfy its immigration policy over the next 2 to 3 years. Pressure on rents continued with a 12.6% increase year over year in April. That was mentioned during my April 2023 PrebStats analysis, resulting from an extremely low 0.6 months of supply. So 0.6 months of supply is unheard of, and that we're seeing in a lot of micro markets. So 0.6, 0.8 months of supply. Anyway, in any event, it's under 1 month worth of supply in most micro markets. And like I mentioned before, that is going to be a huge problem moving forward. Over the last 3 years, rents have increased a total of 19.7% on average. This has likely encouraged investors to keep their suites, resulting in further reduced inventory and brought new investors to the market. So what can I summarize from all of this? Based on the information that we have from TREB, urbanation reports that we receive monthly, combined with the historical data that we study, the adage, when's the best time to buy real estate? Yesterday, still rings true. This is no blip, what we're seeing. We will continue to see that this inflation dance as the powers that be try and wrestle it downward. From my personal and professional experience, the sooner you enter the market with a long-term view, the better your results. First-time buyers and most renters, my advice to you is get off the fence today and take advantage of opportunities in the assignment and pre-construction markets. Okay, so there are some opportunities for those renters and first-time buyers, particularly in the assignment and pre-construction market, as builders try to attract a sale so that they can go ahead with construction. In most cases, the builder needs between 75 to 80% sold units in order to start construction. So they're offering very, very attractive, before unheard of incentives in the pre-construction market. First-time buyers, even second-time buyers and renters would be prudent to take advantage of those, to seek those out. I have access to a lot of pre-construction condos that have inventory currently, as well as the assignment market, which is not publicized. It's not published in the among the MLS or Realtor.ca data. So be sure to reach out to me so you can get access to that assignment market and take advantage of the pre-construction incentives that are happening right now all across the GTA. As for existing homeowners and investors, patience continues to be profitable and will likely hold true for many years to come. This has been my mantra for as long as I've been in real estate, that you have to look at real estate as a long-term investment. You have to be patient. You have to ride through many of the ups and downs. There are mostly ups. If I go back to the TREB average price chart, you will see that the trend is mostly upwards. When there is a downturn in the market, it's usually very brief, and we're looking at 1 or 2 months. As I mentioned before, the only exception to that is when there is a significant change, a significant market condition that alters prices over a longer period of time. In this case, in our case, it was just towards the end of the pandemic, we're still in the pandemic, but I guess the tail end of the pandemic, when we had a sudden interest rate hike back in March of 2022. That was a major economic event, and real estate prices tend to reflect those economic events almost immediately. So we saw that as we saw a downturn in the average price immediately after that first announcement. The subsequent announcement of interest rate hikes continued to have downward pressure on the average price, and that continued all the way until January of 2023. So from March 2022 to January 2023, we saw mostly downward. There was some leveling off in July, August, September, and October of 2022. It was more like a leveling off as buyers adjusted to the increased interest rates. But then there was a downturn again, November, December, and January. January was the last time that there was an interest rate hike announcement at the end of January, after which there was speculation that the Bank of Canada would hold firm at the next announcement in February. I think it was March 7th. And that encouraged buyer activity. So we saw a slight increase in the average price for the first time in February of 2023. So that is it for this episode of the Real Estate Podcast. Thank you for your time. You can always reach out to me through my various channels, Instagram, my Facebook business page, Nico_real estate, as well as LinkedIn and Facebook, personal page as well. Or you can always call me or send me an email. So that's it for now. I'll be back again sharing other tips and as well as the May stats, which will be out in a couple of weeks. So look out for that. You can see back issues of this, or you can listen to back issues of this podcast or view them on my YouTube channel at any time. That's it. Ciao, ciao.